What's up, everybody? This is Sunko, the Korean bro, and today is 2023, February 1st. Okay, and let's start reading start articles. Okay, mm. Three rock solid dividend stocks to buy in 2023 and hold for next decade. Let's see. Okay. First, okay. Agree reality is taking advantage as the net lead sector starts crack. The reason why I'm not afraid of recession 2023. Um, these two social stocks are falling hard Wednesday. Okay, Nasdaq bear mark one growth stock you're going to not buy on the deep. Okay. Uh, Three no-brainer stocks to buy with $300 right now. Down 45%. One Warren Buffett stock growth stocks to buy in 2023. Three rock solid dividend stocks to buy in 2023 and hold for the next decade. Okay, recessions are a normal part of the economic cycle and have historically lasted an average of 10 months in the US since World War II. The 2022 market crash was a correction, and stocks are now better priced for buying. Investing in great businesses at low prices during the downturn can help build lasting wealth. Okay, investing in great businesses at low prices during the downturn can help build lasting wealth. They say there's a recession around the corner. Here's why you shouldn't be afraid of it. Many economists and financial analysts agree that there is a recession coming in 2023. When governments around the world get the current inflation crisis under control, the next step will be halted interest rate hikes or even reductions, and experts predict a brief but distinct period of shrinking economic growth. I agree with this analysis. As a consumer, I'm prepared for a challenging economy. As an investor, I welcome the predicted recession with open arms. Um, it's typically characterized by a sustained decline in the gross domestic product for two or more consecutive quarters. But this is just a general definition. As there are other factors such as job losses, a tight job market, a declining stock market that often but not always accompany recession. Investors might feel scared during these times, but if you're a long-term investor and don't need the money, you're investing for the next 10 years or so, the best course of action is to do nothing. If you're investing in a diverse portfolio of stocks or passive index fund, the chances of losing money over a 10-year period is nearly non-existent. This minimal risk only decreases as the time horizon for your investment increases. In other words, short-term stock trading is risky, but long-term investing builds wealth over time. The buy and hold strategy can build a fortune. More time and farmer patience with short-term bumps in the road will engineer even larger holder reaches. Wall Street reaction to economic recessions. Throughout history, the market has moved in cycles. At certain points, stocks become overvalued, leading to a correction through a rough and tumble mix of sensible and overzealous selling. Eventually, the downturn makes stocks undervalued, and the buying starts again. Drops in stock prices are no more part of this cycle. In the long haul, the general market trend moves inexorably upward. Recessions are an inevitable part of this multi-year economic cycle. According to the National Bureau of Economic Research, a typical economic downturn since World War II has lasted approximately 10 months in the US. However, recessions can range from 2 months, as seen in the 2020 COVID-19 recession, to 18 months, like the Great Recession from 2007 to 2009. Although they can be challenging for consumers, recessions eventually give way to expansionary periods, which tend to last much longer. Mm. The long and short of it, don't panic. Okay. Here are the three big ideas to keep in mind as the economy most likely face a recession in 2023. The market crash of 2022 was a correction to an overheated surge in 2021. Stocks are more comfortably priced now, neither overvalued nor undervalued in the grand scheme of things. Negative GDP growth is just a temporary dip in the road to sustained economic growth. Hmm. Strong businesses will survive, and weaker ones will be weeded out. That's life on Wall Street, and a perfectly healthy process. The COVID 19 crisis brought to light and just amplified some economic issues, but they are being addressed. The process improvements and lessons learned will remain as the pandemic challenges fade away. Being prepared for a recession is important. A 2023 might just be the right time to invest your saved up cash in the stock market. Remember, recessions are a normal part of the economic cycle, and if you understand what causes them and how to prepare, you'll be able to weather almost anything the economy throws your way. In fact, you'll be prepared to build lasting wealth by investing in great businesses at low prices during the downturn. What to buy and when the storm is coming. Okay, for example, let's say you saw a buying opportunity, the subprime mortgage crash of 2008, but you jumped in too early and didn't take full advantage of that market bottom. The S&P 500 index fell another 41% after you picked up some top shelf stocks on the cheap on October 1st. But then the market once shifted thanks to stronger banking regulations, a sharp cut in federal interest rates, and a massive quantitative easing program. The package fueled a strong recovery in the stock market. The S&P 500's total return since then, including that 41% drop in the early days, now stands at 362%. Undervalued industry leaders Undervalued industrial leaders such as home improvement retailer Lowe's, health insurance giant United Health Group, and e-commerce veteran Amazon have delivered 10 bagger gains or more over the same period. So I don't mind the brief recession at all. Many market saving tactics that power the last chart's gains are in play again, and I expect the global economy to recover completely from this malady in a year or two. After that, it's off to the races with a fresh bull market. The gold standard stocks you buy during a market panic can make you richer in the long run. The gold standard stocks you buy during a market panic, just make sure you're buying into companies that will stand the test of time. Robust balance sheets are important, such and a clear path to sustain the business growth is even more helpful. With this criteria in mind, I'm buying media streaming technology expert Roku and the eternal high growth starter Amazon. Hand over fist right now. You should start worrying about an incoming recession and grab some outstanding sector leaders while the getting is good. So the point of this article is that economic cycle is a normal thing, and it's something that repeatedly happens. And even when a recession comes, you have to get prepared. And recession are normal things. Rather, a recession works in a way that makes mm, uh, economy um, mm, in a way that makes economy healthy. Mm, so make sure that you buy when the recession comes and be prepared. And it's something that happens. Okay, so The author is not afraid. Okay, okay, it's about Amazon. Now we have Snowflake. Now we have Snowflake. Yeah. Mm. Okay, I don't have Snowflake yet, but then let's see what that is. Okay. Hmm. Snowflake has strong service offerings and is led by an impressive management team. The business is growing quickly and is likely just scratching the surface of its long-term potential. Okay. Yahoo Finance. Come on. What was it? Mm, Snowflake. Okay. This category leading tech companies building the foundations for incredible long-term performance. Growth stocks have been pummeled this past year by an onslaught of unfavorable macroeconomic conditions, including inflation and rising interest rates, but the tough time won't last forever. While it's important to say exactly when the next bull market will kick off, history has shown again and again that the market always bounces back, even from the most challenging periods. Crucially, investors who back the right companies in the midst of bearish conditions tend to enjoy tremendous returns down the line. Hmm. With that in mind, read on for a look at one top growth stock down roughly 60% from its high that's worth owning for the long owl. Data cloud platform solves the problem and allows the customers to get a far more comprehensive data and analytics picture. Amazon, Microsoft, Alphabet stand as the market largest suppliers of cloud infrastructure service. Between websites and applications, the vast majority of large businesses rely on services from more than one of these providers. While multi-cloud setups have become the norm, it's actually not easy to combine and analyze data generated across these distinct cloud infrastructure services. And this data cloud platform solves this problem and allows its customers to get a far more comprehensive data analytics picture. This is already a mission critical service for many businesses, and it will only become more essential as digital transformation trends continue to reshape global e commerce. On the management front, investors can be confident that Snowflake is in very capable hands. It's president of the product division. Benoit Digaville was co-founder of the company in 2012. Since the company's formation a little over a decade ago, Digaville helped shape the overall data warehousing category and made Snowflake a category leader in the increasingly important niche. Okay, Snowflake once again, they're like leader in their own industry, and what they do is let customer analyze data freely and make it organized. That's what they do. Unfortunately, I didn't even put a penny into it, so we'll consider. Okay. Mm, okay. Snowflake. Next one, three no brainer. Stocks to buy with $300 right now. Mm, Bear markets all long-term investors the opportunity to pounce on high-quality business at discount. Buying stakes in these three industry leading stocks will be a smart way to put $300 worth boatload of cash to begin building wealth on the Wall Street. Okay, bear markets can be a double-edged sword for investors. On one hand, heightened volatility and unrealized red ink can weigh on investors' emotions and encourage poor decision making. On the other hand, every bear market throughout history has eventually been cleared away by a bull market rally. This means sizable declines in the major indexes represent a buying opportunity for long-term investors. The best thing about these buying opportunities is that you don't need a mountain of cash to begin building wealth on Wall Street. Since most online brokers have done away with commission fees and minimum deposit requirements, any amount of money, even $300, can be the perfect amount to put to work during a bear market. PayPal Holdings, okay. Green Thumb Industries and Baidu. I'd like to look at PayPal, okay? Oh. Mm. Okay, the first no-brainer buy the opportunistic investors can snatch out with $300 if fintech stock. PayPal Holdings, PayPal Holdings, PayPal Holdings, PayPal Holdings. Okay. PayPal has been contending with two clear-cut headwinds, being with historically high inflation is reducing hmm, the discretionary spending power or the lowest decline of earners. With less money to spend, it means potentially fewer transactions in its digital payment networks. The other issue for PayPal is the growing likelihood that the US will enter a recession at some point this year. Companies like PayPal that had premium valuations were taken to the woodshed as investors turned their attention to traditional fundamental metrics. But following a huge pullback, PayPal looks right for the peaking. Okay. On a macro basis, fintech is a massive opportunity that's still in its infancy. According to a report from Adroit Market Research, the global fintech market is expected to grow by an annualized average of 20.5% by 2030. PayPal has a real shot to be the number one player in this nearly $700 billion global opportunity. What's been most impressive about the company's expansion is that not even a weaker US and global economy seems to slow down digital payments. Hmm. Excluding currency movements, PayPal's digital network saw a double-digit growth in total payment volume through the first 9 months of 2022. Equally important is the fact that active customer engagement continues to climb. Active customer engagement. When 2020 came to a close, the average active PayPal user was completing 40.1 transactions over the trailing 12-month period. As the end of September 2022, active accounts averaged 50.1 transactions over the trailing 12 months. This is a usage-based operating model, which means more transactions should yield higher gross profit for the company. Despite attractive long-term growth, prospect management is also looking at ways to mitigate near-term economic weakness. CEO Dan Schulman aims to reduce the company's operating expenses by at least $1.3 billion this year. Furthermore, PayPal announced an up to $15 billion buyback program. Reducing the company's outstanding share count can boost earnings per share and make PayPal that much more fundamentally attractive in a bear market. Other than this one, I don't buy it. So, PayPal. What do we have? But leaning on S&P 500 index fund, you can ensure investing for retirement is simple and effective. Okay. Instant diversification, a slight difference in expense ratios can add up to thousands in fees over time. Dollar cost average can help keep investors consistent. Okay, Warren Buffett is undoubtedly one of the most famous investors of all time. Some would argue that he's the most renowned investor ever. And it's for good reason. Buffett's success, both personally and through this company, Berkshire Hathaway, is undeniable. That's why when Buffett gives investing advice, people tend to listen. Luckily, Buffett's investing wisdom when it comes to retirement is simple. Consistently buy into an S&P 500 index fund over time. When asked for investment advice, it's his regular recommendation, according to Buffett. The S&P 500 is the most valuable index on the stock market, tracking the largest 500 companies by market cap. Since the index contains large cap companies and industry leaders from every major sector, its performance is often used interchangeably with the stock market and the economy's performance as a whole. An investment in the S&P 500, for all intents and purposes, is an investment in the broader U.S. economy. The reason an S&P 500 index fund can be your ticket to a comfortable retirement is that it accomplishes four things: diversification, blue chip stocks, low cost, and proven long-term results. As of January 2023, here's how the S&P 500 is broken down by sector. Within those sectors are blue chip companies, which are industry leaders with proven track records of returning great value to shareholders over the long term. Rarely can you go wrong as a long-term investor leaning on the blue chip companies. Fees matter. Arguably, one of the biggest reasons Buffett is a fan of S&P 500 index funds is their low fees. When you invest in an index fund or exchange traded fund, you always want to pay attention to the expense ratio. The expense ratio is charged as a percentage of your total investment annually. Although differences may seem small on paper, but they can really add up over time. For perspective, let's compare two funds. One with an expense ratio of 0.03% and one with an expense ratio of 0.30%. If both people invested $1,000 monthly and received 8% average annual returns over 25 years, here's how their value would roughly differ when accounting for the fees. With just a slight difference, 27%, someone could have saved over $330,600 in fees. They matter a lot in the long run. That's a $333,000, $600 difference in the fees could be a big years worth of the retirement income for many people. Okay, ski. Uh, don't underestimate Amazon. Uh, this article is mainly about Apple. Warren Buffett also picked Apple, and the fact that he invested in Apple signifies that Apple is worth it, right? Mm. So here it says consistency and reliability. Over the last 5 years, the Warren Buffett stock has risen over 240%. It will likely continue soaring over the next 5 years. According to an account, Warren Buffett first invested in Apple In 2016, after hearing how devastated Berkshire Hathaway director was after losing their iPhone in taxi ride. The director just described the experience saying, I feel like I lost a piece of my soul. The anecdote prompted Buffett to take a closer look at Apple and ultimately determine its product had become indispensable to many people. Since then, Apple has become 38% of Berkshire Hathaway's portfolio. By far the largest holding, the second biggest is Bank of America at 10.6%. The iPhone company displays many characteristics Buffett looks for in a strong investment, including strong leadership, consistent long-term growth, and unique products that encourage brand loyalty. Here's why Apple is one Warren Buffett stock to buy hand over fist in 2023. Apple is the king of consistency and reliability. The stock market sell-off in 2022 allowed the Nasdaq 100 technology sector index to plunge 40% throughout the year as macroeconomic headwinds significantly reduced consumer demand. The economically challenging year highlighted the importance of Buffett's long-term approach in investing. Hmm. The investor is often quoted as saying, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. And Apple stock is a strong candidate for a long-term hold. Apple shares sank 27% in 2022, but rose 244% over the last 5 years. Meanwhile, the company's revenue increased 48% since 2018 to $394 billion, and their operating income has soared 81% to $119.44 billion in the same period. Okay, that's it. With motleyfool.com. Let's go over to the next one. Okay. Pfizer. Should you take General Motors for a ride after earnings? The two healthcare stocks have doubled in 2023. Moon Automotive on hiring spree. What could that mean? Moon Automotive. Has Salesforce turn around and begin? Sophie Technology smashes earnings, but beware the Fed decision. Okay. Dividend achiever Cisco ahead of earnings. India to raise spending on job creation ahead of election. How do losses affect Johnson Johnson stock price? Uh, why Rusi spiked nearly 100% in one day? Okay. Okay, that's it. Five articles. Okay. Approximately 100 U.S. listed stocks doubled in January 2023. Wall Street's bullish on Arurinas growth prospect after the elimination of potentially significant legal challenge. Arunia Pharmaceuticals have measured more upside. Why did Sotora Health stock go up? Okay. Now, on hiring spree. What could that mean? Moon Automotive announced 11 new hires across teams and segments. The four new members help flash out the growing commercial and consumer sales division. The first institutional buying in over a month has been lowered. Five stocks will like better than Moon Automotive. Hmm. Shifting gears. Okay. Has the Salesforce turnaround begin? Salesforce stock up 30% from December's low. Morgan Stanley is bullish and see earning growth of 20% and active investors getting involved. Okay. Bullish comments getting involved. Let's see. But despite this opening ongoing headwinds, Salesforce remains one of the Wad Bush's top picks for 2023. The team there recently cited the company's strong growth prospect and compelling valuations. Analysts then nudged uh, is bullish on the recovery prospect and reiterated his previously shared position that tech stocks generally should rally 20% to that. As they are way oversold at current levels. The bulls will be hoping Salesforce recent rally through January doesn't simply tick this box and that there's a lot more still in the tank. Elevated levels of disruption risk, the company faces increased competition and rapidly challenging customer needs. That remains to be seen, but in the meantime, Salesforce shares are enjoying a return to a northbound direction, and investors aren't optimistic as they've been in months. You want to see some change when you put in a year like what they did in 2022. We're only a month, right? Mm, into 2023, and all these signs suggest that major changes are already underway. Mm. Saudi Arabia's public investment fund may be buying the company. This is good news for EV stocks across the board. Market Big keeps the track of Wall Street top-rated and best-performing research analysts, and the stocks they recommend to their clients on a daily basis has identified the five stocks that top analysts are quickly whispering to their clients to buy now before the broader market crashes on. And Lucy Group one on the list. Okay, now it's time for myself, right? Let's see. We cover block, square, Pinterest, C3.ai, sales, Roblo, Salesforce.com, Zora, Amazon.com, Trade Desk. Let's go to Salesforce.com. What did they do? Salesforce.com. Okay, let's look at Salesforce.com uh, first. Okay. Mm. It's the world's number one customer management platform. Will help you marketing, sales, commercial service, and IT team works as a one from anywhere. So you can keep your customers happy everywhere. What can Salesforce do for your business? Okay, customer relationship management solution. Okay, there's a explanation about the Salesforce.com. Customer relation management. Okay, this guy explains the Salesforce in detail. Literally, it's so easy to understand. So what I understand so far is that Salesforce, their main business is CRM. Abbreviation of CRM is Customer Relationship Management. The main purpose of this company is to wow customer. Imagine there is a company. There's a shoe company. Regardless of its size, this shoe company sells shoes to customers. And for example, let's say there's a customer named Kathy, and Kathy, mm, and this shoe company knows much about Kathy, and Kathy goes to park uh, every day to do some workout, so she needs some shoes, right? That's why she has constantly come to websites to look for shoes she wanted. And now we know something about her. She consistently visits website to look for shoes, and she runs every day. And that she um um talks a lot about shoes, and that she comes to shoes every month, stuff like that. This shoe company knows pretty much about her, and this company has got a lot of data about her, but this data will be meaningless um, if it's not used well. But see, Salesforce software mm, helps a company to make that data into meaningful source, and that meaningful source drives its business to grow even more. Mm. Uh, with that data, they can get to know when Kathy needs shoes, and what kind of shoes she want, and uh, where she can get shoes, what branch she has to go to for getting that shoes, stuff like that. Pretty much, um, that's why there another software. Its name is Customer 360, because at the center of their business is a customer, and um, a lot of data, and like a lot of mm, things makes who she is. That's why it's a Customer 360, and like Salesforce is like litter in this industry. That's the pretty much summary of what he's saying. And um and at last, he even mentioned what they do, like the things they do for a community, and Model 111 or something like that. So uh in that part where he talked about Model 111, I could get to know that uh this business, Salesforce, they're not just doing it for profit itself, but like they really cares about community by donating some money, like consistently. So it's worth it. And because of headwinds and operating not operating expenses, but like high interest rates, its price level is pretty low. So I think mm, it's worth investing some money into this company. That's the summary of it, pretty much. And for last but not least, uh, we just covered Salesforce.com, and we'll go over to Zuora, and we'll look at the video clip of this one, and then we'll put an end to YouTube Live tonight, and we'll come back tomorrow or the day after tomorrow. Zuora. Wow, 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 wow. It's really interesting because he talks about subscription model business is the future of a business, and like there's a, something that we do on a daily basis, and there's a gotta be some kind of service that we need every day, and it can possibly be uh, mm, um, it can possibly be provided as a subscription model. And for example, I could possibly watch Netflix or TV all day long, and if I do have that kind of uh, pattern, or if I've spent a lot of monies in history in the past, they could get to know my financial history, and at the end, they know uh, how much I'd be willing to pay for some kind of subscription service, and they would recommend that service to me, and then in return, I'd mm, I'd pay for it, and then I'd be really satisfied with what they provide. So it's pretty much like mm, user generated subscription. I think this CEO is really intelligent, smart guy, smart dude. Okay, this is it, and I'm gonna see you tomorrow or the day after tomorrow. Okay, bye bye.